Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:21 p.m. and that is Central Time. And today is Friday, so it's the big picture, long-term audio and video for the various different asset classes on May 3rd. We're at a very interesting juncture in the markets right now, because we had Jay Powell speaking at the press conference following the Fed's decision to hold rates on Wednesday and then also to slow the pace of quantitative tightening. So they're going to be selling fewer bonds, or at least allowing fewer bonds to roll off on maturity without reinvesting capital. And what I thought was particularly interesting was during the press conference, one of the journalists asked the question, would they be willing to cut interest rates if unemployment got to 4%? And Jay Powell said that that's not what they're looking at. They're not looking at an absolute figure, they're looking at a trend. And if the trend were undeniable and inflation was coming back down, then they might be prompted to act. But then we have the stock market, and the stock market gapped higher today. The Nasdaq was up 349 points. Now, some of that was to do with the strong performance from Apple. Apple's going to buy back 100 billion of its own shares, and if that's not going to support the price, I don't know what would. In fact, I was looking at some statistics. Apple has accounted for 6 of the 10 largest share buybacks ever. But then what Apple also said during their earnings yesterday was they do anticipate that there will be a repurchase cycle starting this year. And that also helps to emphasize that it is a highly cyclical company, because lithium-ion batteries only last for so long. So that certainly contributed to more of a risk-on attitude in here today. And when we look at the earnings that we've had from the big companies, well, we've certainly seen that Apple came through with something that pleased investors. Meta did not. Tesla has been a bit mixed. But then Amazon, because of its investment in cloud computing, did well. And what I thought was particularly interesting is when you read through all of the commentary about Amazon, every single thing that's mentioned is relating to the cloud or the advertising business. And not one of the several news items I read from various different sources talked about the online store. Whereas the vast majority of people, their first point of contact with the Amazon brand is the store. Or then I saw people talking about how many viewers the Prime Video has and how well the advertising is doing. What, of course, this helps to emphasize is that Amazon is now making a lot more money from advertising than they do from selling stuff. And that has been a massive transition for the company over the course of the last several years, because now it's a pay-to-play marketplace. And that was not the case 5 years ago. Then we can think about what's going on in the rest of the world. Well, oil prices were down a bit. Natural gas has been languishing in the region of its historic lows. The accelerated trend that we've seen in cocoa prices has reversed. Coffee also came under some selling pressure, but some of the grains and beans are starting to turn around. Then the UK has been breaking on the upside, and there are big questions around the outlook for interest rates and what impact that's going to have on currencies. And then we have the additional possibility that we might be seeing geopolitical tensions easing. And of course, that would also be beneficial for asset prices and particularly stock markets. So certainly plenty to be thinking about in here right now.